All about stocks this week, the CPSE ETF lists at 10%, and we'll find out if you missed anything in the NFO, can you still invest now? We close in on the last week of speculation before the country votes. We'll tell you what your investment strategy should be. IDFC, the stock in focus this week as it gets the much-awaited banking license. What should you do if you're holding your stock? And our investment advisor, Hemang Jani, has made a profit of 30% on his portfolio, outperforming the Nifty by a whopping 19%. We'll tell you how to build a similar portfolio and get similar returns. Welcome to All About Stocks. Thank you so much for tuning in. It's getting hotter in the political arena as we move closer and closer to finding out who will form the next government. Over the next half hour, we'll tell you what your investment strategy should be at a time like this, when the market is reacting on a daily basis. We'll tell you how you can make the most of this market and make returns over the long term. Remember, you can send in any question you have to the email ID that's at the bottom of your screen. Let me first bring in Ajay to give us an update on the real action on Dalal Street this week. Ajay, also take us through IDFC and what happened with those banking licenses.
Well, Faye, this week the broad theme of the market remained of consolidation. In fact, the benchmark indices ended almost flat. Interestingly, it was the broader end of the market which was extremely vibrant. We saw the mid-cap and the small-cap indices gain 3 to 4%. Several block deals from institutional side were reported. Not only that, the delivery-based buying in this segment has only inched higher. However, global cues were not very supportive. We've already seen profit booking happening in a lot of cyclicals, including financials, ever since RBI commentary on inflation have been released, which is being read as relatively hawkish. We also saw pharma and defensives come back in force, but net-net, the selling from DI community has only accelerated this week. FIs remain buyers. So it will be interesting to see whether it's just a bout of consolidation or a deeper correction could happen, which will only be seen next week when political drumbeats will get louder. However, it was the financials which were in focus this week because after so many months, finally RBI has announced 2 bank licenses, one to IDFC and one to a microfinance company, Bandhan. IDFC witnessed profit booking when the financial final nod actually came in. A lot of broking reports also indicate that it may be a positive long term, but in the near term, IDFC as an institution will have to face a lot of trouble in terms of cost of funds, etc., and balance sheet could come under pressure. Whereas some of the other hopefuls like LIC Housing Finance on dips witnessed buying, like the other ones like Shriram Transport Finance, some of the broking stocks which are hoping for a banking license, all of them witnessed profit taking. But final winner was IDFC, which also witnessed selling on news, but most of the analysts believe that it's a positive because the company has indicated that the bank will also be listed separately and shareholders, existing shareholders will also get shares of that new entity. So net-net, it could actually be a positive in the long run.
All right, Ajay, thank you so much for that update. Joining us today, Hemang Jani, Senior Vice President at Sharekhan. Hemang, thank you so much for joining us. And it is getting really interesting in our market right now, isn't it? I want to first ask you about the CPSE index that listed up 10% on its first day. The question that I'm going to have for you is there will be a lot of viewers who are watching right now who did not invest during the NFO. Is it too late or is it too expensive at these levels?
Well, from the time it got listed, the index has already run up almost about 10% because some of the stocks, which are underlying basket of stocks have already run up about 20-25%. So initial investors actually made more than 10% because they got 5% upfront discount, and since the stocks run up, there was additional gains. Now it's quoting at somewhere around 1940, 1950 levels. We think that for somebody who wants to invest a chunk of investment at one go, probably the level is a bit high, so you should wait for a correction. But for a retail investor who wants to invest over a 2 or 3 year kind of a time frame, a systematic investment would be the best thing to do because these stocks are still attractively valued and the overall potential for upside is much higher. So a systematic investment would be the best way to participate in any possible upside.
Well, also now let's talk about those of us who bid, and a lot of people who bid have managed to get full allocations of what they bid for. Should they continue to hold it and hope for more, or do you think that at this 10% you should be taking some profit off the table?
A lot of people who had a short-term perspective, I think if you're making about 10-12%, it's not a bad idea to book profit. And yes, but you should not book out fully because over the next probably 1 or 2 years, you can expect a much more upside. So For 1 or 2 years, I definitely think it makes sense to hold.
At what level should I consider investing more money in this CPSE index?
I think somewhere close to about 18.50 would be a good entry point because, again, in terms of valuation, most of these stocks are very reasonably priced. If we have a change of government, things are looking much better. So I think that's a great entry point.
I also want to very quickly ask you now, this is a combination of PSU stocks. For those of us who have PSU stocks in our portfolio, does it make sense to add this index, or can it be a replacement for all PSU stocks in our portfolios?
See, it depends upon which stocks the investors are holding. But if you look at this current basket of about 10 stocks, it looks fairly diversified. Most of the great, stocks like ONGC, Coal India, and some of the oil stocks.
It is a little oil and gas tilted, isn't it?
Yeah, it is. But those are the stocks where, there's going to be a big upside potential because of the reforms, etc. So I think depending upon your own holding, you can decide whether you want to replace those stocks with this particular index. And overall, as a portfolio, what kind of exposure one has towards PSU stocks, because you should not have too much of exposure there.
All right. I also want to talk to you about the other big development we saw this week, and that was the banking licenses. We've been talking about banking licenses for a while now. And before we talk about IDFC, which was one of the 2 companies that won a license, I want to talk about the companies that did not win the licenses. And these all, we saw them crack and trade: L&T Finance, Edelweiss, Bajaj Finserv, India Bulls Housing, Reliance Capital, Aditya Birla Nuvo. For those of us who are holding any of these stocks right now, do you think that over the next 2 years, while the RBI has said it's not a window that's closing, you can continue to reapply, do you think they still stand a chance?
Absolutely. If you look at the statement that came out from the RBI governor, clearly the overall policy framework is in place. It's an on-tap policy. So anytime, maybe once in a year or once in 2 years, there might be fresh applications that can be made. Also, the road doesn't end for most of the companies, because it's back to basics for companies like LIC Housing Finance or even L&T Finance, where there was a bit of an expectation that it will definitely happen, has not happened. So in terms of valuations, some of these companies, there could be some short-term disappointment. But overall, I think I don't see any major negative impact of their not getting the banking license. In fact, for something like LIC Housing Finance, because there was a possibility of their getting a banking license where the margins could have compressed, there was an overhang. So it's a big relief for them.
Let's talk about IDFC. Now, the stock was up 3% in reaction to that banking license. But tell us what the road ahead is for the company.
Well, it will take anywhere from about 18 to 24 months to put their entire structure in place. And we think that to get the real benefits of the lower deposit cost, and to start showing any kind of a growth, it will take anywhere from 24 to 36 months. So early days, it's a great company, great management. But I think that because the expectations are too high, at least in the near term, there could be some pressure on the stock because of the overhang of this banking license, and the fact that priority sector lending, SLR, CRR adjustments, etc., will take a while to show up in the profitability.
For the long term, does it make sense right now for retail investors to start picking up IDFC whenever they see a small cut in it?
Yes, if you have a 2-year, 3-year perspective, it definitely makes sense. We've seen that most of the banking stocks, when they got the bank license, after that, the addition to their market cap, the overall appreciation has been phenomenal. It may not be the similar case because now the competitive intensity is much higher. But yeah, from a 2-year, 3-year perspective, it makes sense to kind of accumulate IDFC. It might correct 10%, but it's a great entry point.
All right. In fact, Sanjay Kapoor has written in, he has 200 shares of IDFC, which he bought at 70 rupees. He wants to know if he should hold on to that stock. Now, the stock was up 3% this week in reaction to that banking license, and it ended the week at 124.95. Hemang, hold on, obviously.
Makes sense, I think, from a next 1 or 2 year kind of a perspective, it's looking great.
Time for us to take a look at one of our viewers' portfolios. Suchi has written in. She says she has these stocks in her portfolio. She wants to know which of these she should hold on to and which she should sell. She has 100 shares of TCS, which she bought at 2,100 rupees. Hemang, this is part of your portfolio as well. Hold on to it? Yeah,
I think it makes sense. These stocks have corrected, but overall, I think the environment is pretty good. Particularly for next year, the growth is going to be good, so one can hold on to that.
Okay, interestingly enough, she has 100 shares of Tech Mahindra in her portfolio as well, bought at 1,800 rupees. Now, does it make sense to have TCS and Tech Mahindra in the same portfolio?
Yeah, it makes definitely sense to have, because the spectrum of offering, etc., is pretty different. And Tech Mahindra, even at current price, is available at about 13 times next year price to earnings, so looking pretty interesting.
You know, if we look at the advice that you've given on this show over the last 3 years, she does seem like somebody who follows a lot of your advice. She also has ICICI Bank on her portfolio. This is in yours as well. Hold on to ICICI Bank.
Yeah, it makes sense because we've seen the banking sector doing well for the past 2 months. ICICI Bank is at the forefront of this entire recovery. So definitely she can hold on to that.
Well, last stock on her list is ITC, which she bought at 320 rupees. What's your call on ITC? It has run up a fair amount. Do you expect a correction?
I think overall as a business, it's doing pretty well. Their cigarette business is a cash cow, and the retail FMCG business, we've seen that at operating level, they've broken even, which is a great news. Only thing is that in terms of valuations, it's not looking that great. So it might cool off a little bit, but definitely one should have this as a part of the portfolio.
All right, so great portfolio there that you've got going. If you want any more advice, write to us. Email ID is at the bottom of your screen. You can also reach me on Twitter. We'll take a very quick break. But on the other side, Hemang has picked out 2 stocks that we can buy right now for returns over the long term. Don't go anywhere. Welcome back. You're watching All About Stocks and ET now. Thank you so much for staying with us. Hemang Jani is still with us, helping us with a long-term strategy for our stocks. Now, we asked Hemang to pick out 2 stocks that he believes are at the perfect value right now that we can buy to get rich over the long term. The first of the 2 stocks he's picked out for us is Sudarshan Chemicals. Now, Sudarshan Chemicals is one of India's leading manufacturers of pigments with close to 30% share of the domestic pigment industry. Now, the company earns 2/3 of its revenue from the domestic market. The remaining is contributed from exports from the Middle East, South Africa and Europe. Hemang, tell us why this stock makes your list.
Well, first of all, we have seen the large cap stocks run up quite a bit, and now the rally spreading to some of the broader market, and the good quality mid caps are the spaces where there's going to be maximum upside potential. From that perspective, I identified these stocks, and Sudarshan Chemical in particular, because we think that the user industry, the overall growth over the next 2-3 years is going to be very huge at about 15 to 18%. And now in the last 3 years, this company has focused on the high performance, high margin components. If you look at their performance last 2-3 years, the high margin component business has grown from 17% to almost about 21%, almost a zero debt company, high return on equity, and a very good quality management in place. So we think that this kind of companies can give a very substantial upside over the next 2 years' time.
Well, I want to know what your target is on this company, and I also want to ask you this. Now, given the fact that we are all expecting the rupee to firm up, where does that leave these export-oriented or companies that do a lot of export?
Well, if you see, the rupee has actually not appreciated a whole lot, though there was a panic, valuation of about 67. We are currently at about 60, 61. So yeah, it might appreciate a bit, but even adjusting their margins continue to be very high. And we think that wherever there is a sustainable growth and a visibility, market would want to give a higher valuation to that. So I'm not too much worried about the rupee part.
All right, and what's your target for the company?
We are looking at a target of about 750 for the stock in the next 1 year's time frame.
Well, Sudarshan Chemicals was Hemang's first recommendation. Let's also talk about his second recommendation, which is Torrent Pharma. Now, we know a private equity firm, Crystal Capital, has invested $40 million in the company. Tell us why, of all of the pharma options that we have right now, why does Torrent make your list?
Well, again, a mid-cap stock with a good, strong presence in the domestic market, good quality management, and now that they've invested into the international business, we think that there is going to be a very substantial growth in the top line and the net profit both. The reason why we like is that, the margins both in the domestic business as well as international business are much higher than the average margin which are there for the industry. And they've recently acquired one company in Germany, where it has started making profits in a big way, and there are a couple of products where if they get the approval, there could be a big upside to their margins overall. So we think that at about 12-13 kind of a valuation, this makes a lot of sense.
Vivek Anand has written in. He has 17 shares of Axis Bank, which he bought at 11.92. Now that stock ended the week at 14.28. He wants to know what he should do. You've always been bullish on Axis Bank. Should he hold on to it?
I think overall, in the next about 6 to 12 months' time, the private sector banks would give an upside of anywhere from 30 to 40%. And some of the banks like Axis Bank, ICICI Bank, even some of the smaller banks like maybe IndusInd and Yes Bank will also give a similar kind of an upside. Because Axis Bank completed one major transaction of 5,000 crore, their book value has actually gone up. And we think that the wholesale cost of funding for them has actually come down because the interest rate scenario is looking much better. So Axis Bank continues to be one of the top performing banks, and it can give an upside of about 25 to 30% in the next 1 year's time.
All right, 25 to 30% on Axis Bank. It makes sense to hold on to that stock. Let's take another portfolio from Shada Sivan, who's written in. Now, he has these stocks in his portfolio. He wants to know which ones he should be holding or selling. Right on top, GIC Housing Finance, bought at 123 rupees. What's your call on GIC Housing Finance? You talked about LIC a little earlier. Do you have a similar confidence in this company as well?
Well, these are the smaller mid-cap companies, high dividend yield company, and the valuation is very attractive, about 0.7 time price to book. So it makes sense to hold on to that one.
All right, 50 shares of Dena Bank bought at 93 rupees. What's your call?
Overall, I prefer the large banks like SBI, PNB, BOB, but in an environment where there's going to be improvement in the macroeconomic situation, even some of the smaller PSU banks can give an upside. So Dena Bank definitely looks attractive.
He also has Dhanalakshmi Bank, 50 shares bought at 73 rupees. He's lost nearly half his value here. What's your call on Dhanalakshmi Bank?
They have completed a major restructuring exercise. They've raised funds recently. So I think it makes sense to hold on to it for about 25-30% kind of an appreciation.
What about the change in management?
I think it makes sense because, when you have a change in the management, you've already done your restructuring, then in a growth phase, company can do much better. So now that it's very well capitalized, it makes sense to hold on to it.
Well, another disappointing stock on his portfolio, 60 shares of Nalco, which he bought at 80 rupees. That stock ended the week round about 40. So a fair amount of disappointment as an investor there. What would you recommend he does?
I think it makes sense to actually exit from Nalco and move into something like Sesa Sterlite, because in terms of valuations, growth potential, this stock is looking much better.
90 shares of IVRCL, which he bought at 127 rupees. That stock ended the week at 14 rupees. Well, if he's holding it, expecting it to climb back at some point to 130, do you think that's at all possible?
That looks a tall order. And though in a environment where we are seeing the capex cycle getting revived and some of the stocks doing well, it might go up. But I think at some stage, maybe around 35-40 level, it makes sense to exit and move into a better quality stock.
And what do you think would be a better stock for him at this point?
Well, within that space, I think something like Bharat Electronics or L&T or BHEL, these are some of the stocks which are looking much better. Even Engineers India, I think, is a much better quality stock.
Sadashivan might not have sent us his entire portfolio, but if you look at just this, he's missing a lot of the defensives in his portfolio. He doesn't have, pharma. He doesn't have FMCG. Would you like him to add maybe even IT to his portfolio?
Absolutely. I think it makes sense to have some of these defensives, be it IT, FMCG, pharma, something like Tech Mahindra, or something like maybe even HUL or Jyoti Limited, which is into the similar kind of a business. It makes sense to have some of these stocks because they will give both stability and the appreciation over a period of time.
All right, and if you want to know how to design a portfolio, you just want a model portfolio that you can pick up and use, after this break, Hemang is going to talk about his own portfolio. We'll talk about how he managed to make 30% returns and beat the Nifty by 20%. Stocks like SBI, Grasim, don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you so much for staying with us. Hemang Jani is still with us, and he's teaching us how we can get rich over the long term, and he's doing that by example. Now, Hemang designed a portfolio for us on this very show on the 4th of January last year. That portfolio is currently at an overall gain of 30.62%. Let's compare that to the Nifty. Over the same period, the Nifty is up 11%. So Hemang has actually beat the Nifty by about 20%, which is so impressive. This is also our top performing portfolio on the show right now among all the portfolios that have been designed. Now, if you want to know how Hemang did it, let me give you a list of stocks in his portfolio. TCS up 64% since we bought it. Maruti Suzuki, ICICI Bank, SBI, L&T, Reliance Industries, Grasim, Z Limited, Aurobindo Pharma up 182% since we bought it. Tata Coffee. Hemang, thank you so much for such fantastic recommendations. I understand you want to make a change in your portfolio now.
Yes, I think Grasim, we think that is not doing that well, and some of their businesses like VSF is going to take a while before it starts contributing to their profitability. So I think it makes sense to exit out of Grasim and move into something like Sesa Sterlite, where both in terms of overall outlook and in terms of valuations, it's looking much better. There are short-term triggers as well in terms of the mining ban, which could get lifted from Goa. Plus the merger with Hindustan Zinc or Balco could give them access to the cash which is lying in their books. So looking at all these things, it makes sense to move into CPSE Sterlite from a next 2-3 year kind of perspective.
Okay, for anyone who's watching right now about CPSE Sterlite, is this a stock that we should be buying for the short-term triggers, or like we talk about for the next 5-6 years, maybe even longer? Do you believe that the stock has long-term value?
Absolutely. This is one of the best performing metal stock, which is available at about 6 to 7 times kind of a price to earning. Every quarter it's generating a cash of almost about $1 to $1.2 billion. And remember that we have gone through a lot of pain in terms of this iron ore ban, etc. So it has gone through that cycle of pain, and now it has started doing well. Once we have this kind of ban getting lifted, it's going to do much better, and it is a very diversified kind of a business model. You have iron ore, you have other metals, again the oil related things. So I think it's a great stock to have.
Last question. You have some fantastic stocks in this portfolio. We talked about Aurobindo Pharma, Maruti Suzuki, TCS, all showing us returns. SBI is down 13%. You obviously want to hold on to it. You have faith it will recover?
Absolutely. I think we've been discussing for last more than 1 year about the PSU banks, but remember, it has really pulled back very smartly in the last, I think, 1.5 to 2 months. And remember, when the economic revival is there, some of these banks can give you phenomenal returns, and we have seen that happen in 2003 to 2007 period as well. So I think I'm very happy that we have SBI in our portfolio, and I would definitely like to hold on to it, because from here it can give phenomenal returns.
What about the NPAs? I mean, we have a lot of guests come on this show, talked about the fact that the NPAs are so high, the bank is badly managed. It does make sense to just leave all PSU banks out of your portfolio. You obviously disagree. So tell me why you disagree that SBI, in terms of just management and NPAs, will be able to overcome what it's going through right now.
I think some of the things that we are discussing are pretty much known, and market is far more dynamic. Market would want to give the right valuation for the right stock. So I think when you are at the stage where the economic revival is going to happen in the next probably 6 to 8 months time, I think the NPL thing will get subdued. As you see in the next 1 or 2 quarters, we'll get to know that the NPL actually would look much better. And overall, if you have a better interest rate environment, and if you have a stable government at the center, and the growth comes back, banking stock would look much better. So I think that we should look at that aspect and look at the potential upside that we can have over the next 2 years. All
right, potential upside on SBI. What I'm going to do is I'll give you a recap of the stocks in Hemang's portfolio. There's TCS, Maruti Suzuki, ICICI Bank, SBI, L&T, Reliance Industries, CPSE Sterlite, Zee Limited, Aurobindo Pharma, and Tata Coffee. L&T recovered after we had so much pain on that stock as well, in terms of when you bought it from. So the portfolio has been doing so well for us, up 30% as returns, and we have Hemang Jani to thank. And if you have any questions about what you heard, feel free to write to us on the email ID that's on your screen. We'll ask Hemang to come into the studio and answer your questions for you. It's always a pleasure to have you on All About Stocks. Thank you so much. You can reach me personally on Twitter as well. It'll be my pleasure to hear from you. Thanks for watching.